video, I'm going to show you how to build a stress-free income trading the micro ES futures, where in about an hour I was able to capture $165. Plus, trading tip of the day, identifying gaps. Thank you so much for clicking on my video. If you find value in this information, please consider subscribing. This is the stress-free trade of the day for September 26, 2026. Typically, I do not trade the open, mostly because I used to trade the NQ, and as anybody knows, trading the NQ at the open is like putting your hand in a chopping a wood chopper. It's just not a good idea. And a lot of times people will wait 15 minutes, 30 minutes. I used to wait an hour until I figured out, or until the market told me or showed me what direction, if any, it wanted to go. So, but given that I'm now trading a much more civilized instrument, as if I can say that, the ES, and specifically the micro ES, it's so much nicer. First of all, the ES does not move like a chihuahua on steroids. It moves. Yes, it moves. It has a pretty decent range. The last few days, it's been anywhere from 30 to 40 points, which is plenty. There's plenty of opportunities. So without further ado, I saw that there was a gap in the market as it opened from yesterday. I trade only the New York session, and so my charts are set to the the real trading hours, regular trading hours, that is. And so overnight the price moved up significantly, and when I saw that it opened up here and immediately started to retrace down, I had an idea that possibly the market was exhausted overnight and that it wanted to come back down, possibly halfway and maybe even all the way back to the previous close, which was down here in the 80s, 57, 80-ish. And so I watched it for a few minutes. This is a 2-minute chart. As soon as I saw that it went up and it got rejected, I immediately took a trade, two contracts I entered here, and I really on this leg down, I thought this is too easy, and so immediately and I knew that I wasn't going to add any more, at least not yet, until I confirmed that I had a good trade. And then it retraced a little bit, and I think I was only in drawdown, possibly, let's see, I went in at 18. I think it went up to 20, 21, something like that, and that's where I got in right there. And then it just came down. It kept coming down. I knew that I had a good trade when this gap right here was wanting to get filled. And so, as many of you know or have heard, that whenever there is a gap, if on that trading session or any time after that, those gaps tend to want to be filled in. Let me just change this a little bit, just so that you can illustrate this, where this gap is. Okay, and so this is the gap right here from the open of the regular trading hours down to where the market closed previous day. So as soon as it started coming down, I figured I'm going to stay in there and just keep going. Came back a little bit, not very much, and it took a little bit of time, but eventually it did a quick at 7 a.m. it did a quick spike, which I wasn't really worried because as soon as it went up, it came back down, and I figured that was probably a whole bunch of stops getting filled or taken out, and then it just started dropping, and then it and decided that I was going to one of my mistakes, or one of the things that I have to work on, is just holding trades a little bit longer when it's going in my direction. I got out probably here a little bit too early at just under it looks like 90 58.08. By then I believe I had captured about $50-ish, and then it just kept going down. It retraced a little bit. Again, I wasn't worried just because my stop was still up here, and as you can see from the video, I wasn't moving my stop down. I usually don't move or trail the stops too quickly because with the micros, especially the ES micros, there is very little risk, which translates to very stress-free trading. So once that started to come back down again, I knew that I was in the money, and I also knew that it was coming down here. If it was going to retrace down to the 80s, it was going to come down here. Sadly, I did not hold it. I got out here at 96, and it came down all the way down to where I had signaled earlier that it would most likely come down, and as it usually does, it flushes all the way down. So hopefully this video was helpful in showing how these gaps are useful and to be able to identify where they are. It's a great, very strong indication that if the market has been exhausted either on the way up or on the way down, those gaps end up being filled. And so that's the tip for today. It's identifying gaps in the market. Thanks for watching. And now enjoy the sped up version of that trade. I hope this video was helpful. This channel was created to show that it's possible to day trade without the risk and build an additional income. Thanks again for watching. Don't forget to like and subscribe. Take care.